We have Eric Geier with me here today. You can learn what his team is up to by heading over to puresurance.com. And with my Minnesotan accent, that probably didn't come out quite great. So I'm going to make sure that is a clickable link in the show notes. So it's puresurance.com. But Eric, I appreciate your time here today, as this is going to be an interesting conversation about health insurance. And I know, being self-employed in some regards, this is something that is top of mind, especially single family incomes. Everybody is going to kind of struggle with this and how to navigate some of this. So thanks for your time today as we kind of make sense of some of this world.
Yeah, absolutely. It's my pleasure, Jack, and thank you for having me on your show.
I'd be interested. It always fascinates me, and I don't want you to have to spend a ton of time on this, but how did you find your way to this niche? I'm sure there's a story there.
Yeah, so I worked on Wall Street on trading desks for the better part of 2 decades. And when I was no longer employed in that area, seeking health insurance was very expensive, and it was exhausting. I ended up buying into a franchise that didn't really have any good options either, because a franchise organization cannot insure distinct owners. So it just kind of led me down the path of solving a problem that every individual business, not everyone, but a lot of individual business owners are faced with, as well as small teams. And that is, how can I get comprehensive health insurance for me and my family, but also be able to offer it for for prospective employees I want to attract to my business and also retain, because I don't want to lose anybody to what's arguably, after compensation, the most important benefit that we have.
Mm-hmm. Well, I'd like to explore some of that, especially when it comes to the entrepreneurs. We got a lot of real estate investors are going to be one-man bands, maybe
Yep.
a couple people.
Mm-hmm.
Outside of Obamacare or those directions by your state. What else would there be?
Sure. So if I could just kind of take a background on what got me into kind of the real estate investing space, is that we're the health insurance provider for Homevestors, 1,200 plus nationwide franchisees, and we've been so for the past 5 years. So we have a lot of experience in working with single owner businesses. A lot of their franchisees are single owner or small teams. And what I found out was a lot of those guys are going without coverage just because the options are just too expensive. And better than anybody how capital intensive real estate investing is. So it created an opportunity where, through private means, we're able to provide coverage that not only frees up liquidity, but also provides benefits without having to first satisfy deductibles. So it happened by happenstance, but it turned out to be an incredibly good fit for the real estate investor, partially because they're single owner and it's a very capital intensive business.
So how are you pulling this off? It kind of sounds like, since you are the providing health insurance for this group of investors, is it because that's a group or an entity and it's kind of underwritten as a corporation in itself, or how does that piece work?
Right. So when Homevestors is obviously a franchise organization, and each one of their owners are distinct and no attachments whatsoever to the mothership other than, royalties and that kind of thing. In that sense, they're really no different than any individual business owner. They have their own LLCs. And, it's very difficult for insurance companies to manage risk on one person getting insurance, which is why the health insurance exchanges are so expensive. Insurance companies need to pad their, premiums to account for unpredictable risk. So, that is a huge disadvantage to the individual business owner. However, there are private options that we found. We created a portfolio around it to be able to offer these owners a very good option that enables them to go on their daily business without having to sink, $1,000 in for a health insurance policy, while realizing benefits without having to satisfy $7,500 deductibles before they see it. So and the other thing about what I found out about working with entrepreneurs is that they're not huge users of health insurance. Like, they'll go for the annual exam, but they really want asset protection on the upside. Everybody wants asset protection, but it's more defined with the individual business owner. I don't want to go bankrupt if I have a health event. So when we structure these plans, we structure with asset protection in mind. That's the number one aspect of coverage that we're looking at when we cover business owners.
Okay. So could you kind of give us a kind of a summary of what is a common policy then? For what would people expect here?
Yeah. So the day-to-day benefits are extremely generous. They're, each insured is looking at something like 20 doctor visits per calendar year if they want it, chiropractic benefits, urgent care benefits, obviously hospitalization, catastrophic. But what the real value is that, you first of all, you don't need referrals to see a specialist. That's big, and it pays benefits for all medically necessary services and procedures. The fact that, somebody can just go to the doctor and not have to worry, is this or is this not going to be covered? That's a big one. The second thing is that it's very flexible. Like, HomeVestors has investors, for example, who have properties in multiple states. And oftentimes, even a PPO plan, a traditional PPO plan, will not offer benefits other than emergency ones outside of your state. So the fact that it's network agnostic is hugely attractive. You can stay in network, for example, if you like, and the real benefit to that is that the convenience of doctors filing claims on your behalf, but you literally can go anywhere you want. You would just pay and get reimbursed. So there's a flexibility there that does not exist with a traditional health insurance plan. And, another aspect of this coverage, which in my opinion is a game changer, is that I don't know if you are familiar with direct primary care providers. They're getting very big around the country. It's a membership based primary care model where you essentially have 24/7 access to your doctor, whether that be through text, through video chat, or go see or go to the office. You don't have to wait 3 weeks. You can pretty much get in same day if you need to. I am such a member of a practice. Now, if you have traditional coverage, let's just use Blue Cross Blue Shield as an example, any monthly membership fees that you're paying to the concierge doctor or direct primary care provider is a sunk cost. You don't get that back. With private coverage, you get reimbursed for each visit that you go to such a doctor, and that offsets your membership fees. So, like for me, for example, I pay $85 a month to go to a direct primary care provider, and I can see her as much as I want. This insurance reimburses me $160 each time I go, because that's my office visit benefit. So it's, I'm basically paying for my DPC membership fees through insurance that's as much as 60% less than a traditional Silver, Blue Cross Blue Blue Cross Blue Shield plan anyway. So, it's basically you're double dipping in a way, right? So that's what I love about it. I'm a healthy guy, but I go to the doctor when I'm not feeling well now because it's so easy for me to get in. And I know that every time I go, I'm going to be reimbursed. So that incentivizes me to go. And which is another great point. This coverage rewards you for going to the doctor. It takes away one of the biggest stumbling blocks to going, which is I know I have insurance, I could go, I just pay this copay, so on and so forth. But this kind of adds gamification to it a little bit, where if you know that you're going to go and get paid for it, it'll make you more likely to get that EKG that you've been putting off, or the colonoscopy, or whatever. I mean, I'm in my 50s. That's a reality for me right now. But just for things that you normally wouldn't do, it's much better, because we all know how important early detection is for cancers, for pretty much any illness that's out there.
Well, I think a lot of investors or entrepreneurs, for that matter, they're kind of looking for possibly for a situation where you can kind of set it and forget it and try to save the money.
Yeah.
It almost sounds like there's some management on our end asking for reimbursement and the like. Am I mistaken there?
If for a DPC provider, yes. For an in-network provider, just the regular doctor, no. It works the same way from a claims perspective, but I was just kind of illustrating the flexibility that if you or your family was a member of a DPC practice, that would not be a sunken cost like it would be with a traditional plan.
Sure.
You would get money back for going, which would offset that DPC fee. But in terms of going to, your regular doctor or specialist, as you do now, they can, provided they're a network, they can just file claims on your behalf.
So with what people are experiencing now when it comes to insurance, health insurance, the cost is astronomical sometimes. Yeah. It's just almost, like you pointed out, it's almost cost prohibitive in some regards. Yeah. Could you do a quick comparison as to what can people traditionally expect here?
On a premium perspective?
Yeah.
Somebody in their 20s for full coverage with catastrophic, somewhere between $200 and $225 a month. In their 30s, maybe that goes up to $250, $275, 40s, $335, $350, and so on and so forth from there. It's age specific, because as we get older, more things go wrong with us. We use the doctors more, and there's more risk to the insurance company. So it's totally age driven. The premiums do not rise with number of claims or dollar value of claims. It's coverage that can be kept till 65 years of age, if you like, at which point we all go on Medicare in this country. And, a more flexible policy we have not found. It really, if you're living in Texas, for example, and you move to Virginia, it would probably be the other way around, but let's just use that as an example. The coverage would work just as well in Virginia as it would in Texas, mainly because, first of all, you could see anybody you want. And secondly, it is a nationwide network of nearly 1 million providers. Obviously, yeah. Sorry.
No, go ahead, Eric.
I was going to say the major hospitals are all, in network, and it's exceedingly easy to find providers.
Just to remind everybody, head over to prosurance.com to learn a little bit more about what we're talking about here, and maybe connect with Eric and his team. And if you found some value in what we're talking about so far, share this episode with one of your investor friends. And if you're watching us on YouTube, do us a quick favor and give us a thumbs up and subscribe. So, Eric, you're going to have to give us the down and dirty here. What are the gotchas? Because some of the numbers you've been throwing out, the premiums that matter seem very low in comparison to what I've experienced anyway
Yeah.
in regards to that. The numbers you're throwing out actually are quite a bit lower than what at one time I was paying biweekly on
Believe it.
this.
Oh, from employer coverage.
You're right. Like, but that was still my portion.
Yeah.
So how is this possible, and what are some of the gotchas here?
No maternity coverage. And you do have to be reasonably healthy to qualify for the coverage. So no cancer in the last 5 years, no insulin dependent diabetes, immune related illnesses and musculoskeletal stuff like MS would be knockout, and heart attack, cardiovascular disease, stroke, that kind of thing. The really ugly stuff that you really should be on a traditional plan for. But if you are reasonably healthy, and we've done some analyses, and from what we've learned from home investors, about 75 to 80% of the entrepreneurial community qualifies for it. So if you don't need pregnancy coverage, which is a kind of a scam in itself, and we can go into that if you like, and you are reasonably healthy, this is a very good value proposition for the independent business owner.
And what is the process in validating that type of information?
Oh, and there's no physicals, it's questions. And based on that, the insurance companies do their underwriting. They basically look at prescription history. Prescription history tells a lot. And if there's anything ominous in that, they'll ask for more information and make a decision based on that. It's actually really good to go through an underwriting process with insurance, because I've encountered a lot of situations where there's been wrong information on a medical report. And with wrong information on a medical report, that could kill your chances of getting life insurance, long-term care coverage, anything in the future where underwriting is important. And you can have your medical history changed. You just have to go to the doctor and have it changed. But I actually was just talking to somebody who there was stroke written all over their medical records, and this guy did not have a stroke. He was in Denver and the skiing, and he had a faint episode because of the air there, right? Mile High City and all that kind of stuff. And they wrote stroke because of it, possible stroke. And when he saw that, it was like a wake-up call. He's like, I didn't have a stroke. And lo and behold, he was able to go back and have his medical records changed, and and coverage was doable for him. But that would have presented a lot of problems. For the one part is he's actually launching. He's a key man in a new company venture that's getting outside money. So with his medical record the way it was, he wouldn't be able to get key man life insurance. So this actually was fortuitous in that he was able to do this before, a lot of this stuff came up.
Well, I'm going to put you on the spot. You use the word scam when it comes to, pregnancies.
Yeah.
And then cover.
Yeah.
What were you referring to there, and what other quote unquote scams are there in the marketplace that we should be aware of?
Cash prices for pregnancies are between $5,000 and $10,000, depending upon where you have it done. Meaning that you can go and say, here's $5,000, here's $8,000, and the pregnancy is done. You'll pretty much pay the same thing because it's marked up so much for the charge master price at hospitals, which is akin to MSRP on cars, before discounts. So when insurance companies, when they determine benefits, the part that you have to pay, it's based on that high number. But the reality is, for them and for everyone else, it's about half that. So you think you're going in and, oh yeah, I need maternity coverage, but at the end of the day, you're probably going to pay the same thing by being a cash payer, maybe less. I've seen them as low as $4,500 for a regular delivery than you will for having insurance, unless you're on a very low deductible plan. which is very expensive, very, very expensive.
Well, could you ascertain then, you point out one scenario there, but is that the case for the majority of the
Yeah.
healthcare that we receive? Is
Yep.
that the prices are just completely blown up and it's primarily because of the insurance companies?
Yep. Yeah. There's a lot and kickbacks to providers and facilities. When you go just to get labs, 12, like you could get a full thing of labs, a full panel of labs, and see a $1,200 bill on that. The real price could be 10% of that. And you could go to, and here's just a place to go to walkinlab.com, book lab tests through LabCorp or Quest, and you're going to pay rock bottom prices. Why is that? Because there's kickbacks to the providers that are referring them to these labs. And a lot of times those kickbacks are pretty material. So there's a lot of mouths to feed in the healthcare / health insurance industry. And what we advocate for is complete transparency. And this coverage that we do offer, it offers benefits at the true price of care. And, that's why they can afford to be so generous, is because A, yeah, it's the true price of care. And B, you're going in as a reasonably healthy person. So based on their actuarial metrics, you're not going to be a big user of coverage and they're going to make a lot of money off of it. So, but that said, I have clients, young clients in their 20s, who pretty much they negate their annual premium bill through excess. If you have a benefit through insurance that's higher than what a provider is owed, you're going to get the difference back to you. Let me just kind of illustrate that very, very easily. So on the top level of coverage for one particular plan, the chiropractor benefit is $160 per visit, and you can use that 6 times a year. I pay $40 to go to the chiropractor. So that means, since my benefit is $160 and it costs me $40 to go to the chiropractor, I'm going to get that difference, or $120 back, each time I go, and I can do that up to 6 times per calendar year. That's huge. That's a $960 benefit. That offsets my premiums. So if you're a 25-year-old who's paying $200, $225 a month for insurance, that, let's just call it $2,400 a year, you're getting a $960 benefit that's probably going to cost you $240, 40 times 6. And then the difference, $720, effectively offsets your annual premiums. So your premiums just went from $2,400 to $2,400 minus $700, which is represents the excess benefit of those 6 annual chiropractor visits.
That's really interesting, because more times than not, the insurance that I've experienced, it doesn't really matter what the chiropractor charges. That's what the insurance company provides.
Yeah.
I would never see any kind of excess funds back to me.
Yeah. I had a conversation with this woman, and she wasn't getting it, because her traditional insurance policy that she had, she's like, well, I go to the chiropractor and I just pay a $50 copay. I said, I said to her, I said, what if it was cash? Like how much would you pay if it was cash? Oh, like $45. Like, why aren't you paying cash? Is my first question. Like, why are you even going through insurance? Right.
Yeah.
And secondly, in the scenario of our coverage, you would make $115 per visit for 6 visits on that. She couldn't get it.
This kind of reminds me of a story, just personally, because we had to get a prescription once, and it was an ongoing thing. So I asked the pharmacy once, because it was like $20 every time. That was my copay, $20. Okay, here's my $20. And I stopped him once and I said, if I would just pay for this, what would it be? It was 10.
Yeah.
It was half if I would just pay for it.
Yeah.
I was like, why didn't you tell me this then? Why did I have to ask? And then it just leads to, why is it cheaper for me to just buy it?
Yeah.
And I think, and so I started to get into the habit of asking each time, just because, like you just pointed out, more times than not, it's actually cheaper than the copay had been.
For like a generic. Yeah, absolutely. Like if you go to GoodRx and you take a routine antibiotic like amoxicillin, if Walmart, for example, is overstocked in amoxicillin, it could be free. Right.
Yeah.
And if you have insurance, you'll go and you'll pay your $20 copay if you don't know any better. But why would you pay a $20 copay that is free, or $1 or $10 in your case? And it makes no sense. It's what I do is really not selling. It's more educating. And people, the insurance industry, and Wall Street does the same thing with finance. They create these elaborate names and that nobody understands, so they think only they can do it. But you start peeling the onion and you start seeing how all of this is just a ruse. It's all smoke and mirrors to justify higher costs. And the clients that I have are much better educated than the average insured on a traditional plan, which is essentially a bury your head in the sand, which is what the BUCA plans want, which BUCA meaning Blue Cross, United Healthcare, Cigna, Aetna. And don't take my food away from me is basically their thing, right? They live high in the hog. There's a lot of money that they make, and because people think that health insurance is this so complicated thing, and it's really not. It's not at all. It doesn't have to be. And if you just kind of get a little bit of education, then you just become smarter, and that intelligence leads to you paying less for coverage.
Just to remind everybody one more time, puresurance.com. That's going to be a clickable link in the show notes. Eric, before we transition into rapid fire questions here and close out this episode, I'm sure I'm missing something else here. Is there a question or concept you think we should have made sure we covered here?
I just would love your viewers to just take, a little bit of steps just to kind of ease the burden of their health costs. If they need a scan or they need imaging of some sort, go to a website like greenimaging.net, and you'll save hundreds of dollars by getting any kind of ultrasounds or CT scans by doing that. I have a client who needed an ultrasound. His doctor was charging him $1,500 for the ultrasound through Green Imaging, 6 miles away from his house. He got it for $110 through an independent.
Do you have like a list of resources like that on your website anywhere?
I don't. I share them with clients. I'm happy to put together a list of things, and you're welcome to share them with your readers. But yeah, I mean, there's a lot of resources out there to save money, especially if you're uninsured. I'm not advocating for being uninsured, and health insurance at a reasonable price should be the antidote to uninsurance, because just because you've never had anything happen to you in the past is no indication that a serious injury or illness is going to come out of left field. And I just kind of want people to understand that. But there are resources out there, independent imaging centers, like walk-in lab for blood work, that's a fraction of the cost. And they always run specials that make those costs even less. So yeah, I'm happy to put such a document together and forward it over to you, which you're welcome to share with your listeners.
Yeah, I bet you a lot of people would take advantage of that, because You're absolutely right. And until you become self-reliant to a certain extent, lab work is a great example. I didn't even really have an idea that there were such companies available. And then I did a search online a few years back, found a place in a strip mall. Walk in, they do your test, and it was, like you said, a fraction of the cost. It was,
Fraction of the cost. It's the same exact test that your doctor would order, but you're just cutting out that kickback scheme.
yeah. And it's surprisingly easy to understand and read when you got it.
Yeah.
Again, it's pureassurance.com. And Eric, if you're ready, we'll jump into the rapid fire questions.
Let's do it.
So, first of all, since you've been working a lot with entrepreneurs and real estate investors, I'd be curious, what lie do we tell ourselves and sometimes to others?
That you're going to make $1 million the first year of investing in properties.
Yeah. Very optimistic, right?
Overly optimistic, but people tend to overestimate results in when they go into business.
Hmm. Do you have a book recommendation, or what are you reading right now?
Yeah, so as fate would have it, I just finished a book called Predictably Irrational by Dan Ariely, and it talks about what we do as human beings that we think are the right things to do and the right ways to approach things, but they're completely irrational in the way we think about it. It's such an easy read, and it's so good, and it's so enlightening. I think everybody should be reading it, but if you're a business owner, you're going to find out a lot of insights about what makes you tick and what goes into your decision-making process, and what, takeaways to what you can do to put yourself in a better decision-making situation.
Yeah. I'm going to look that one up. We have something my partner and I were talking about just the other night, where for as long as we've been doing this, there's one scenario where we don't understand why people act so irrationally.
Yeah.
And it just has baffled us. And we were talking about it again just the other night, and we don't understand. So maybe this will give me the answers.
One of the major causes that causes people to act irrationally is unpredictable stress that you didn't see coming, that's overwhelming. That, I saw a very disturbing article about a woman, a normally good woman, who left her infant baby alone while she went on vacation for 10 days. The cops said they've never seen anything so bad in their life. Obviously, the baby passed from emaciation and thirst and all this other horrible stuff. But this is a relatively normal, sane person, when confronted with all of this stress that she didn't see coming, does something completely irrational that you and I couldn't even fathom doing. And yeah, she got life imprisonment, but that's really not the point of it. The point of it is what can we do to the best of our ability, to ahead of time, to try and prepare ourselves for the kinds of stresses that are beyond the normal day-to-day stressors. And resiliency is a huge part of that, So I'm very interested in concepts that, talk about resiliency and inner strength, because, as an entrepreneur, we don't know what's around the corner. We don't. And I say we because I'm a business owner too. And things that kept me up 2 years ago aren't the same things that keep me awake now, because I built resiliency to that. But there's other stuff. But knowing that you're resilient can be in and of itself a great self-introspective thing, because you become attuned to the fact that you can deal with anything, even when it seems like there's no good options out there.
Mm-hmm. No, good point. If you could go back in time and give your younger self one piece of advice, what would it be?
Be a better student. Don't think that you've got all the answers at a young age. That's a big one. Get a mentor, somebody who you look up to, somebody you trust, and engage with that, because doing it all on your own puts a lot of unnecessary suffering. So that's what I would do.
Sure. What single strategy, process, or tool have you implemented that has the biggest time-saving impact?
Virtual assistants. I love them. $5 an hour for grunt work that I don't have to hire for has been a lifesaver. Absolute lifesaver. I'm a huge, huge fan of virtual assistants. The right ones. You can get wrong ones, but do your due diligence and find good virtual assistants to take off all of the non-revenue producing stuff on your plate as a business owner. Because I think a lot of business owners confuse busy with productive. And you don't want to be busy doing the wrong things. You want to be busy closing business and adding value. So virtual assistants have been a lifesaver. And with virtual assistants, you don't have to worry about, paying FICA and all this other stuff. And at $5 an hour, you're not even going to be able to get anything like that anyway. So yeah, I'm a big fan.
Yeah, that was awesome. I appreciate you bringing that up, because I frankly, I think everybody's tired of hearing me preach from that pulpit regarding
That's great. Take it off. Be a delegator. Just focus on why you're in business and growing that value.
Yeah. Well, Eric, this has been a fantastic conversation. I really appreciate the value you brought here today. It is puresurance.com. That is going to be clickable in the show notes. But Eric, I hope you'll come back again sometime and we can dig in, because I have a feeling you talked about perseverance quite a few times. There must be a story there that we could dive into.
It would be my pleasure.